The embrace of fintech in the context of India and Indian consumer with GPay and the likes of it is far higher than what you find in some of the developed nations. At almost 40 to 50% of the working population today belongs to the new age consumption category. So in the United States, online delivery is meaningful, but you don't have as much a Blinkit equivalent like you have in India. This is where we as a country are breaking away from the traditional mold.
Welcome to part 2 of my conversation with Mr. Trideep Bhattacharya, President and CIO of Equities at Edelweiss Mutual Fund. Join us as we continue taking a deeper look into how long-term investment thinking works. Welcome back, Mr. Trideep. In the first part, we discussed your investment philosophy, and now I'm curious about the future of investing, both for investors and also for Edelweiss Mutual Fund. So these days, data analytics and technology is disrupting a lot of industries. What role do you see data analytics and technology playing in the future of investing for equity investors and also as a mutual fund house?
In a nutshell, very high. I would say it makes markets more efficient. It helps us do lots of research in a small period of time and in a more time efficient manner. AI is a great assistant if one can learn to use it more constructively in getting to research insights or gathering data which otherwise would have taken days and years. We use that in our research process where we sift through earnings transcripts, through management interviews, through surveys very quickly to understand, particularly with large elements of data, to get to the meat of the issue and make a conclusion on that. While earlier it would have taken a fortnight or almost a month to gather data with so many countries, so many states within India, it becomes quicker, particularly with the use of AI and particularly with the embracing digital or online being a key part of element. So I do see technology, AI, a big enabler for us, one on the research side as a decision support tool, and also in terms of coming up with faster decision making with regards to portfolio construction.
So it helps you speed things up in a nutshell. So now, do you have any thematic funds in Edelweiss Mutual Fund or any new kinds of funds that you're coming up with, like innovation driven or any other kinds of funds?
So we tend to stay away from those in general for themes which are more time based and can go away in a bit.
Right.
We do have a few sectoral funds where we think there is reasonable diversion or dispersion within the sector that we can play around. For example, financial services is a big sector where you have banks, NBFCs, insurance, capital markets, broking, and various different elements to it, where one could play one segment versus or along with other. And likewise, consumption, new age consumption, traditional consumption, and various different ways to go. So in sectors like these, we do have sectoral funds, but otherwise, more innovative funds of late that we have participated in is in the SIF category, where it's a new segment for the market. It gives a certain nuanced investors a way to express their view while taking higher risk. We think that it will be one of the meaningful innovation in the mutual fund domain over a period of next few decades. And we are a participant in that with a couple of funds there as well. So yeah, we have been reasonably innovative, but not being innovative for the sake of it as well.
So of course, SIF is a new category. It's relatively new and there's probably a lot of potential in it, like you said. You mentioned new age consumption. Can you tell me more about this category? Because a lot of our viewers may or may not know what it is. So
I was myself surprised to know that the Gen Z consumption habits are materially different from the traditional consumption habits. Just to pick an example, when I say new age consumption, the brands that they go for, the relatively less brand loyal that they are, the functional characteristics of the brand rather than the brand itself, the importance of the same, are materially different between a traditional consumer and a new age consumer or a Gen Z consumer. And if you look at consumption is gradually shaping up in that direction. I would say that almost 40 to 50% of the working population today belongs to the new age consumption. And hence, over a period of time, as the purchasing power of that segment grows, you will see new age consumption becoming a lot bigger part of the consumption pie than it is today. And it's something that equity markets, in the form of their percentage allocation to two different elements, will change over a period of time, and we will see that happen. That's one aspect of it, different types of brands. The second is also the channel of consumption. While earlier generation or traditional consumption used to happen mostly on store, looking at the item and then buying, increasingly most of the buying happens online, and with business models like Blinkit and other fast consumable items, the whole consumption landscape is changing more towards online and faster delivery as opposed to going to the store. Now imagine that you have a real estate portfolio which is heavy on footprint of retail, which is now not needed as much as it was earlier, because now a lot of it happens through the dark stores, and that ultimately gets delivered to the consumer's home. It has different connotations for real estate, it has different connotations for how consumption will evolve in the country, and it also shows where the incremental money is going. So two examples to explain how new age consumption is shaping up in India. And in this, I must say that some of these categories are places where India is taking a lead. So in the United States, online delivery is meaningful, but you don't have as much a Blinkit equivalent like you have in India. So in many ways, new age consumption, in the way we have taken fancy to these segments, are a lot more ahead of the curve as opposed to what we have seen in United States. Likewise, the embracing or the embrace of fintech in the context of India and Indian consumer with GPay and the likes of it is far higher than what you find in some of the developed nations. So in many ways, this is where we as a country are breaking away from the traditional mold of following what US or Europe does and then accepting that over a period of time to business models, ways of consumption, ways of spending, which are truly indigenously kind of done and first in here rather than in US or Europe.
And we're seeing this happening all around us.
True.
So now I want to ask you about your outlook on Indian markets, especially in relation to the global markets as well and global flows, because India is also an emerging economy. So I want to know your view about that.
I would say that we went into this West Asia conflict in a fairly good shape. We had 2 quarters of back-to-back earnings upgrade. We spent a good part of 2025 without any trade deals. If I jog your memory to where we were in February, we had sorted out the trade deals with the majority of the nations, including US, EU, UK, New Zealand, Australia, and a few others. Almost 75 to 85% of our exports got tied up with some or other trade deal. With earnings estimates down our way, fiscal consolidation was also there. Indian markets started outperforming global markets, and FIIs in the month of February also started investing back in India. That is when, in March, the US-Iran conflict started, and we went on from becoming an anti-AI trade last year to becoming an anti-oil trade, which is where we have been in the last few months. And that is where we are right now. The good news is that oil, after spending a good amount of time north of $100, is now less than $100. And that is a big relief for Indian consumer and India as an economy, because we are a major importer of oil. Given that, where we are, I would be constructive on Indian markets for the next 12 to 24 months. We think as we see the war resolution happen, 2 things happen. One is the post-war reconstruction phase is usually a positive time for equities globally, not just in India. Secondly, we have spent a good bit of time in the wilderness, being an anti-AI trade and also anti-oil trade. As some of the AI valuations gradually moderate over the next 12 to 24 months, India relatively would have done well as a market as compared to some of the global markets. And third, given that we entered into the West Asia conflict relatively strongly, I would say earnings would make a comeback meaningfully faster than what people expect. So while I would expect June quarter numbers to be a little more soft, the recovery follows thereon. And hence, standing today, investing in a gradual manner into equities is a very good phenomenon as long as the investors have an outlook for the next 12 to 24 months. So, constructive on Indian equities would advise a staggered entry and would advise entering into not just large caps but also a combination of mid and small caps.
Right, so you're cautiously optimistic about this. And of course, the general advice is to stagger your investments
That's
so
true.
that you can average out the volatility over the long term. How do you see Edelweiss Mutual Fund's role evolving along with India's growth story?
So, we are part of the financialization of savings, if I may say so. A lot of wealth of Indian families historically has been in two asset classes, real estate and gold. It has held up fairly well, but incrementally the new generation way of investing wants to be a little more liquid categories, and that is where equities turn out to be a fairly good asset class. And the reason I say so is since COVID, I think India, I have seen, has woken up to a little bit of more towards equities than any other asset class, partly because at that time only equities were kind of open where a lot of businesses were stopped for the moment. So given all of these reasons, my sense is that as part of financialization of savings, we do see our role in getting incremental consumers, incremental investors to the industry, not only through our mutual fund offerings, but also through our SIFs as part of the asset management industry landscape. And I think we have only equities is still about 5 to 7% of asset allocation for investors in India, whereas the same number for developed markets is in at least 20s, if not 30s. So we have a meaningful room to grow from here.
Right, so there's potential, a lot of scope to grow.
Absolutely.
Like you said. So I am personally intrigued by your mention of your experience in developing and also developed markets. So can you just tell me in which of these markets you have experience in? Have you visited any of these countries?
So for close to a decade, I was based in London, followed by a few years in Dublin as well. And in terms of managing portfolios across the globe, when I talk about developed markets, I have invested, or I have a track record of investing in Europe, in Japan, Australia, and North Asian markets, which include Korea and Taiwan, along with China, along with emerging markets like Indonesia, Thailand, Philippines, and India. And that's why I said that, having seen what mature business models, what old age looks like, going through young age in terms of calibrated better growth rates, makes me a lot more objective investor overall.
Right. So you have a holistic view because you have experience in all these markets. So this was a really nice conversation. I really enjoyed it. Thank you for being here today.
Likewise.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.